Okay, good morning, everybody. We're going to start very soon. I just want to let everybody know if you have questions for our panelists, please add them to the group chat, and then I will direct those questions to be answered throughout the presentation. So right now, I just wanted to thank everybody for coming out this morning on the Saturday morning to learn about the PPP workshop. I also want to thank APACC for sponsoring this event and helping us get this put together. So APACC was established in 2000. APACC is an incorporated 501c6 nonprofit membership association. We are known as the gateway to the Asian and US businesses. It's governed by a board of directors with operations and programs supported by membership dues and financial contributions. So I want to thank all of our sponsors for their contributions and our members for their membership dues. Membership is comprised of Fortune 500 corporations, multi-ethnic private business enterprises, small businesses, and corporate professionals over a broad spectrum of industries. To facilitate business is our mission. Our mission is to facilitate business relationships among Asian and US-based companies and to promote the economic advancement of the Asian Pacific Americans. APACC represents Asian and Asian Pacific countries. That's 30 plus countries, so we're very broad in who we represent. And I want to introduce our two speakers today, Mike Stapleton, as well as an active member and supporter of APACC. Mike is the Senior Vice President at Mercantile Bank in Grand Rapids and has been advising Michigan-based middle market businesses for over 30 years. Mike advises companies in many industries, including plastics, metal forming, tool and die, general manufacturing, business services, specialty finance, structuring, work capital, equipment, and real estate financing, as well as recapitalization, acquisition, and buyout financing. Mike works with family, ESOP, and private equity-owned businesses. Mike and Mercantile Bank have been an active participant in the Paycheck Protection Program process. And then there is Jamie. Jamie is the proud owner of a local CPA firm, Capocore Professional Advisors. Did I say that right, Jamie?
Yeah, Capocore Professional Advisors, yep.
Located in downtown Lake Orion, Jamie specializes in providing accounting, financial reporting, tax planning, tax preparation, and advisory services to closely held businesses and individuals. He has leveraged the use of technology and cloud computing to stay competitive and relevant to the changing business environment. In his over 30 years of public accounting experience, Jamie has worked in a multitude of areas, including manufacturing, medical, professional service companies, and real estate. Jamie is a graduate of Walsh College and is a member of the American Institute of Certified Public Accountants and the Michigan Association of Certified Public Accountants, where he serves as the member of the board of directors and the incoming board secretary and the finance committee, and is currently the chair of the Small Firm Practitioners Task Force. It's a mouthful. Thank you, gentlemen, for coming in today. So I'm going to leave it up to Mike to start off on who qualifies for the PPP.
Sure. Thanks, Duke. You know, actually, before I talk about who qualifies, let me just put the PPP program in perspective here. There are a whole lot of terms and acronyms have been flying around over the last couple months, and just to put it in perspective, the PPP Paycheck Protection Program is really just one part of a major effort on the part of the government to assist businesses, really to assist wage earners in retaining their employment as we navigate this coronavirus and these shutdown orders. And we all know that this is taking a little bit longer than people were expecting to kind of deal with this, the pandemic and the coronavirus. And as a result, I think the government has done a decent job of kind of amending and changing and adjusting the program to account for the fact that this is taking a little bit longer than planned. The program itself is a $650 billion program. And one of the reasons Duke and APACC set this up today is because the deadline to qualify for this program is fast approaching, and there's still about $140 billion remaining to be allocated. And we believe, and I think APACC believes, there are hundreds, maybe even thousands of businesses yet in Michigan that likely qualify and have not applied. So the timeliness, I think, makes some good sense here. And with Jamie's help, we're happy to kind of walk through who qualifies, what the terms are, what the process looks like. So, you know, the qualifications for the program are really quite simple. And you may have read otherwise, but pretty simple qualifications. Companies that have been in existence since February of this year and that have 500 employees or less. And when it comes to, well, have I been impacted? Have I not been impacted? The only qualification, the only verification that you need to make is that, as the bullet point suggests there, that economic uncertainty makes the loan necessary to support your company's operation. And that's a pretty broad statement. And I think most businesses will likely be able to say honestly that there is enough uncertainty to make this program necessary. So that's the only standard necessary in terms of whether or not you've been affected by the coronavirus.
I was just going to say that you know, a lot of news was made relative to some of the bigger companies getting it, and did they qualify, and what the Treasury Department was going to force people to really qualify. And I think that scared a lot of people off. And the good thing is Treasury came back and said, anybody under $2 million is going to be already determined that they've got economic uncertainty. So that kind of gave a lot of people a sigh of relief relative to being able to go for this loan, because there's a lot of people that were questioning whether they really applied. But now with the safe harbor rule that they created there, it does open it up for just about everybody.
Yep. Yeah, good point, Jamie. Thanks. You know, just a couple other fairly simple qualifiers. Your business can't be delinquent on any other SBA or existing government-backed loans, and the company itself and any individual owner that has 20% or more ownership has to be, and I'm gonna put this in quotes, I'm gonna say good standing. I'll define kind of what that means when we go through the application itself, but these are fairly, these 4 bullet points, as you can tell, pretty low bar for who qualifies, and the government has really cast a broad net to make as many businesses eligible as possible. Duke, you want to go to the next slide, unless people have questions on who qualifies. So the terms and conditions, these two are pretty straightforward. Maybe you've heard some of these. I'll clarify because they've been amended and adjusted. In fact, as recently as a week or two ago, some of these terms have changed. But here's the key, and I started with this. All applications have to be submitted to a lender by the 30th and approved by the SBA. So, and I'll get to this in a little bit more in a minute, but and this may be kind of counterproductive from Mercantile Bank's perspective, but in the interest of time, to the extent that you have a banking relationship or a relationship with a lender that knows you, it may be easiest, likely is easiest, to work with that lender or that bank first, because there is some due diligence required, some information, which I'll get to in a minute, or where if you're a brand new customer to a bank, it's going to be a little bit more burdensome paperwork wise. So if you have the opportunity to work with a bank that already knows you, that's probably your best bet. Other terms and conditions, the maximum loan amount that your business would qualify is equal to 2.5 times the average monthly payroll related costs. And that is a very broad, the definition of payroll related costs, pretty broad. It's salaries, it's wages, commissions, vacation pay, sick pay, family leave pay, contributions to employer contributions to employee benefits, retirement, even employee contributions to payroll taxes. That's a big bucket of payroll related costs, and 2.5 times your average monthly payroll is the maximum amount of the loan that you qualify for. The interest rate.
Mike, I have a
question.
Sure, we have participants that say that their bank is no longer accepting applications for the PPP. Do they have other options like Mercantile Bank?
They do have other options. Mercantile Bank will accept applications up through June 30th, the date the program ends. And I know there are several other banks as well that have kept their window open. We're a community bank. We're focused on the state of Michigan. We're headquartered here. And, of course, our preference would be, and if you reach out to me or any of my colleagues between now and the 30th, we'll want to talk to you about your openness to moving your banking relationship to Mercantile. We won't make it a condition, but we're really interested in relationships, which is why we're keeping the window open. And we'd be happy to talk to anyone that, for whatever reason, hasn't applied or has been turned down or has gone to a bank that's kind of closed the window. So yes, there are still options.
Hey, Mike, can I just talk about real quick what, I don't want to make sure there's no confusion with the average monthly payroll and what that looks like for sole proprietors, because I think there's a lot of confusion early on in the application process of if I'm a sole proprietor and I'm just got my own business, do I still qualify and what do I use? And Treasury came out with some regulations early on in the program, probably about a month in, and basically said that sole proprietors or self-employed individuals or partners in a partnership that have self-employment income do qualify for this loan as well. And your average payroll is determined based on your net income on Form Schedule C of your 2019 tax return. And really what they tell you to do is take line 31, divide it by 12 and multiply it by 2.5. And that is the amount of the owner's payroll. And then you would add in any other payroll costs associated with the business. So if you have other employees, it would be those costs. So the owners of self-employed businesses will also qualify for this loan.
Good clarification. Thanks, Jamie. Appreciate that. Just going through some of these other key terms, I started to talk about the interest rate, very attractive at 1% per annum, per year, and those interest payments may not need to start for at least 10 months, likely even longer deferral on interest depending on when you apply for forgiveness. And speaking of forgiveness, and Jamie's going to talk a little bit more about this kind of either now or a little bit later on. These are, let me say, up to 100% of the loan principal and interest can be forgiven, and the terms actually been kind of relaxed within the last couple of weeks, so long as 60% of the loan proceeds are spent on these payroll related costs, and you have the business has up to 24 weeks to spend that money. That's a significantly easier test to meet than what was originally proposed. So really, if you make the calculations right, do this right, spend the money right, all businesses should plan on or ought to plan on being able to have 100% of the loan forgiven. The other 40% needs to be spent on a couple specific things like rent and utilities and certain other interest on some other loans, also within 24 weeks. And Jamie might have more specifics on this, but it is important that your employee count, or at least the average number of paid hours, not be reduced during this period of time, whether it's 24 weeks or something shorter. you'll have to kind of represent that during the forgiveness process that your employee count has not changed. So, and that process, which Jamie might talk about in a minute, that forgiveness process, that window opens up basically now, because some companies have had their loans for 8 to 9 weeks already. Whatever is not forgiven, again, very generous terms, can be repaid over 5 years. Monthly payments over 5 years at that 1% interest rate. So even to the extent not forgiven, these loan terms are very, very generous. And here at the bottom, this last point, I think is really, really noteworthy. There are no fees to the borrower, no collateral needs to be pledged, no personal guarantees required, and you can prepay to the extent the loan is not forgiven. Hopefully it will be 100% forgiven, but if it's not, you can pay it off early with no prepayment penalties. As someone that's been lending to businesses for 30 years, let me tell you, those are pretty attractive terms, particularly added, when added to the possibility that 100% would be forgiven anyway. So
yeah, and
those are kind of the high level terms and conditions for the program.
Yeah, Mike, can I just take a minute to talk a little bit about the forgiveness side? The couple points here is the 60% of payroll is also required as part of there's two sides of this loan, and I don't want to get too confused, but I don't want people to think that they can get the loan and just use it for whatever they want. The loan has to be used for specific purposes, and 60% of it still has to be used for payroll at some point in time during the period through December 31st. Or it won't qualify as part of the SBA PPP loan. So I've had clients ask me, can I just use it as a line of credit, or yeah, it's a 1% loan. Can I go out and buy new equipment with it? And that's really not the intent. So don't think about getting the loan and not using it to pay payroll, because you're going to need to do that. But on the forgiveness side, this is almost everybody should be able to meet the 24 weeks now. The biggest issue is there's two reductions relative to the payroll, the forgiveness, and one of them is the what you paid your employees compared to what they were paid in the first quarter of 2020 at an hourly rate. So as long as you continue to pay employees at the same hourly rate that you were paying them in the first quarter, then there's going to be no reduction there. The other one is what they introduce is called full-time equivalents, or FTEs. And that's deemed as anybody that works 40 hours or more is deemed one full-time equivalent, and anybody less than that is going to be based upon their average hours divided by 40, or you can simply just make every employee that's under 40 a 0.5 full-time or a half-time full-time equivalent. And so you add those up, and they look at a certain period, either back in 2019 or from January 1st to February 2020, and they look at your FTEs that you had then, and then they look at what you had during the time of the forgiveness period, this covered period that they call. And you just need to make sure you have the same number of employees on payroll in order to get the loan forgiveness. That's probably the big test right there. There is a provision that they call the safe harbor test, that if, like a lot of businesses, the minute that the state of Michigan issued the stay-at-home order, a lot of businesses laid off their employees or moved their employees to unemployment. And it was okay to do that as long as you bring them back out of unemployment by the end of the year. Then you're going to be able to, and you bring your full-time equivalents back up to the February 15th level. Then that doesn't reduce your forgiveness either. And then there's also like 3 new exceptions that they've added. Like if you can't find employees and you've tried, or an employee doesn't want to come back, those are all things that will be that they'll allow you not to count against your FTE reduction. That will reduce your forgiveness. So there's been very, very generous in everybody being able to get the forgiveness now.
I have a couple of questions.
Sure.
Can you apply for forgiveness of the loan before the 24 weeks is finished?
I believe that you can. There's nothing in the forgiveness instructions or the law that says that you can't. I think you may have to do some prorations, meaning that if you decide to go 9 weeks, you would have to worry about some of the 9-week equivalents versus 24-week. But I believe that you would be able to. Mike, have you seen? I mean, I know that we're still waiting for final guidance on some things, but I don't know from the bank's perspective. Are you going to allow people to turn their loans in earlier?
Yeah, my understanding, Jamie, is that companies can, depending on how they choose to define their covered period, they can apply for forgiveness before the 24 weeks.
Okay.
It's important to note that the final rules and the process for forgiveness are not yet published. So we expect that any day now, but my expectation is that companies that have already met the test and spent the money according to the rules will be able to apply for forgiveness before 24 weeks.
I'm hoping they are too, just because of the simple mathematics of it. You borrowed on 2.5 times or 2.5 months worth of payroll, and you've got 6 months to pay it back. A lot of people are going to be, running out of money, out of the loan money, probably by week 12, 13. And then they're going to have to make business decisions. And I'd hate to see them have to still continue to pay payroll for the next 24 or next 12 weeks. So I agree with you, Mike. I'm hoping that that's what happens.
Right.
Okay. I have another.
Selfishly, just from go ahead, Duke. I'm sorry.
I have another question. So go ahead and finish your point.
I was just going to say, selfishly, from a banker's perspective, we're certainly hoping that the SBA allows kind of a rolling open forgiveness period, because what we would rather not see as bankers is all the forgiveness applications coming in on one day or within 1 week. That's going to just create a very similar backlog and bottleneck that happened when the window opened and everyone flooded in. So, but that's just my perspective as a banker. So,
well, I have the same perspective as a CPA that's helping a lot of clients with this.
Right.
So the question is, how would anyone show that this particular loan amount has been used for payroll and utilities? Do we need to maintain a separate account?
That's been one suggestion that's been floated around there too. Depending on your books and records, I recommend that if you've got a good accounting system, you're not going to really need to worry about a separate account. But if you don't maintain a good set of records, I would recommend that. That way you can show the actual disbursements. There are going to be requirements to provide payroll records, tax reports, quarterly tax reports, and receipts, paid receipts, and so forth, as part of the forgiveness application. So you're going to need some of that stuff. So again, some people are doing separate accounts and just transferring over or paying directly out of there, so that they know that that's where the funds have gone. And that's not a bad idea. I don't think it's necessarily a requirement, but you're going to need to still keep records.
Yeah, Duke, let me just add to that, because we've had that request from several of our borrowers. We're discouraging the opening up of a brand new account just for the PPP process. We will do it for companies that really don't have any other way of keeping good track of the proceeds and how things are spent. Our hope is, and our expectation is, that good record keeping will suffice and a separate account won't be necessary. And I say that, and probably most bankers say that, just because of the administrative cost of opening up a new account and then likely closing that new account, by the end of the year.
Yeah. And also, anybody that is using a payroll service, most SBA has said that they will accept reports generated by the major payroll companies. So if you're using a Paycheck or an ADP, or even, I know Gusto has got approved reports, and I think QuickBooks or QuickBooks Online has got approved reports that will allow you just to print that report and upload that as part of your forgiveness application.
Okay, I have another question. If you've received the loan proceeds prior to the passage of the PPP Flexibility Act, does the 60% of payroll apply? Or are we still obligated to adhere to the 75% for payroll?
No, the 60% still, the 60% is the new requirement.
Yep.
the Flexibility Act amended the CARES Act accordingly. The only thing the only differences between the flexibility and the original PPP is any loans after or before June 5th, which was the enactment date. They can, anything before that date is still on the 2-year plan unless they renegotiate with the bank to go to a 5-year repayment. And anybody prior to June 5th can elect to have the 8-week period versus the 24-week period. But I believe everybody after June 5th is going to be on the 24-week and will be able to do the 5-year repayment period.
I have one more question, and then we're going to move on to the next slide. For PEO, Professional Employer Organization, would just a payroll report suffice without the tax filing?
Oh, there's specific guidance relative to PEOs, and I believe you're going to have to be able to demonstrate that it's a separate entity. So you may have to, tax filings are still going to be required but I believe that there's a certain schedule for those tax filings relative to that individual employer. And I don't want to get too deep in the woods on this, but I believe you're going to have to provide that additional schedule to the 941 with the payroll forgiveness, because tax 941s are going to be a requirement for the forgiveness.
Okay, on to the next slide.
Which is a great segue into this.
Exactly. You know, what else will you need to provide? Now, this is where, you know, who you're dealing with and what lender you're dealing with is going to make a difference, because now we're getting into what banks specifically may require. There is, of course, and we're going to go through the 2-page application itself. That's standard, and that's published by the SBA. Everyone needs to submit that, but different lenders will require different ancillary information. And I'll speak here to what Mercantile Bank requires. Others may require additional or less information. First of all, we will ask you to provide evidence of the payroll related numbers that you're using. And we have asked for, IRS form 940 or 941s as evidence of total payroll related expenses. The default is to look at 2019's average monthly numbers from those from that reporting, but we would accept something more recent, first quarter averages, but generally we'll look for that IRS form 940 or 941 as evidence of those expenses. We'll also ask for evidence of the number of employees. And I don't know these IRS forms maybe as well as Jamie does, but we've been looking for the Michigan Unemployment Insurance form 1028 as evidence of the number of employees. That ends up becoming important during the forgiveness process, as Jamie has already talked about. So we would ask for those 2 pieces of support. And in addition, and this gets to, you know, where does it make sense to apply? To the extent that the business is not already a customer of Mercantile Bank, you know, there are laws on the books that require us to know our borrower. And so if you're not a customer yet, we're going to ask for some pretty basic corporate papers, depending on the type of entity you are, an operating agreement, articles of incorporation, and some form of resolution that authorizes whoever is going to sign for the loan. And any 20% owner will be asked to supply a copy of their driver's license as well. Those are the minimum requirements that we have at Mercantile Bank. Some other banks may ask for more than that. They may ask for financial statements on the business just to kind of understand whether or not there's an opportunity for a bigger relationship. We won't ask for that, but we'll want to have a discussion with you about your openness to a relationship beyond the PPP loan with us. Since, as I mentioned earlier, we're a relationship bank. We're not really just transactional, looking to just provide PPP loans. So we'll want to have a discussion with you about your openness to that. But these are the only pieces of additional information that we would ask for beyond the application itself. So this is, and I don't want to necessarily go through the application in great detail, but one of the purposes of this webinar is to demystify the process. This application, which is just 2 pages, really shouldn't take you more than 5 or 10 minutes to fill out. It's very, very simple. And I will highlight just a few things here, but they're basically things that we've already talked about. At the very top, you're just checking the boxes to what type of entity you are, and then providing your just normal traditional, your legal name, your trade name, your address, tax ID number. Then in that next section down below, there you go, perfect. These are the numbers. What is your average monthly payroll as defined broadly, the way I did a couple minutes ago, and that times 2.5%. I don't want to get too far into the weeds, but there's another program that you may have heard of called the EIDL program. If your business has applied for and received one of those loans, the amount that's not forgiven will be repaid with the proceeds of this loan. I don't want to get into the weeds on that because this program is really not proven to be particularly effective, so I don't know that too many people actually have these loans, but it is a provision. So average monthly payroll times 2.5 equals the dollar amount that you qualify for. And then further to the right, the number of employees that you have. Again, at Mercantile Bank, we'd ask that you verify that with some payroll reporting. How do you intend to use the loan? As we've talked about, it needs to be at least 60% needs to be used for payroll. So you'd certainly be checking that box. And to the extent that you plan to use part of the proceeds for some of these other qualified expenses, you just check those boxes. Continuing down the form, ownership of the business. We'd ask, or the SBA asks that you list everyone with a 20% ownership interest or more, including their social security number and address. Then the rest of the form is really just answering questions that determine whether or not you qualify or there's an automatic disqualifier. So just quickly going through these questions, recall that in the qualifications I mentioned, the business itself and the owners have to be in good standing. And that means things like, has the business or an owner been disbarred, otherwise determined ineligible, presently in bankruptcy? Fairly standard questions. My expectation would be that the answer would be no. If the answer is yes, that's a bit of a problem. Question 2, any other SBA or government-backed loans in default? Again, I would expect the answer there to be no. That's important. Question 3, you are asked to disclose your ownership interest in the owner's interest in other businesses. There are some rules that aggregate businesses together to determine total qualification for the program. So you're just asked to attach a Schedule A to list the owners that have an interest in other businesses as well. Question 4, again, that's that other program that I mentioned, the EIDL program. If you have applied for one of those loans and received one, you're asked to confirm that. Further questions down below have to do with, again, whether or not the owner or the business itself is in good standing. Questions 5 and 6. If the answer to those are yes, just be clear, the loan will not be approved. Question 7, I would expect most people on this seminar, most employees of these businesses are based in residents in the United States. If they're not, that's okay. Just know that the wage total and the payroll cost total can only include employees in the United States. Question 8, I'm not quite sure why they asked that question because I don't think it disqualifies anyone, but there's a question about whether or not you're listed in the SBA's franchise directory.
Yeah, what I think that is, Mike, is because of the franchises in general are sometimes disqualified out of the because this is an SBA loan, you have to qualify as an SBA business. And I think that they made special exceptions for some of the franchises and so forth. Versus because sometimes they may be deemed to be too big with their affiliation relationships because of either their gross receipts or their 500 employees or so. So I think that's why they have that qualifier there.
Okay. Page 2 of the application, again, just more certifications, verifying all the things that we've already talked about. You've read the form, you understand how the program works, you've not applied twice, all the proceeds will be used as they're expected to be used. Some other general verifications, interesting ones, to the extent feasible, you'll purchase only American-made equipment and products, again, to the extent feasible. And then further certifications down below concerning, the second one here is that economic uncertainty provision. It makes the loan necessary. Again, that's as broad as it gets in terms of who qualifies. You'll provide the applicant with or you will provide the lender with documentation for everything that you represent if asked. You won't apply for 2 loans. You certainly won't receive 2 loans if you apply twice. I mean, all these other standard kind of certifications are just representing repeatedly, sometimes multiple times, that you believe that you qualify and you're certifying that you do. Sign that application, send it into your bank with whatever other additional information they ask, and that's the process. Pretty straightforward.
Yeah, Mike, the relative to the application, I've had a few clients, and I did it for a few clients, that we applied to multiple banks just because maybe our primary bank wasn't getting back to us in time. And so we went through a different alternative route or whatever. And you can do that until you get to the point where you're given an SBA number or been approved by one of the SBA, and then you have to at least let the other bank know that you're no longer interested. So this was during the time frame of when, the height of the application process, and some banks were just getting overwhelmed. And so we were looking, everybody was afraid that the money was going to run out. So, so we were able to apply to a couple different banks at that time.
Right. Yeah, we experienced the same thing. The system is built such that once you get that one SBA approval number, no other loan for that entity can be approved. But you're right. I think it's kind of a workflow management thing. We don't necessarily recommend that you apply at more than one place, but certainly understanding with a deadline fast approaching, and certainly when it first opened up, people were concerned that money would run out. Multiple applications were being submitted.
And I think that the SBA has finally got caught up. I mean, I know that I advised a client and they applied on a Sunday through another entity, one of the non-traditional banking routes, and they were approved and funded by Tuesday, I think. So the SBA is catching up with these, and now that some of this backlog has been filled, I think these are happening pretty quickly.
I would agree. I would agree. When we have a complete application with everything, we're able to input, get approval same day, and typically fund within 24 to 48 hours.
Yeah. Yeah. So it's a quick process. And one thing that I've been telling, and we could go to questions here in a minute, but the one thing I've been telling everybody of my clients, for people that I've been advising on this, is go apply. This is a very rare opportunity in which the government is providing businesses with help, and everybody qualifies. And even if you don't get it forgiven, you've got a 1% 5-year loan. You cannot get that cost of money anywhere else. And so, and now the forgiveness is almost just about shy of guaranteed, the way that they've changed the rules. So there's really not any reason not to work with somebody to get this thing applied for. And there's still, like you said, I think there's, roughly $100 to $80 billion, over $100 billion still available or whatever, which is just crazy. So, there's still money out there.
Okay, I'm going to start with some of the questions. What are the common mistakes when applying for a PPP loan? What often do you see reasons why applicants are declined?
Yeah, I'll take that one, Jamie. You might have some observations
Yep.
as well. I will say that the most common mistake or error are really the calculation errors on the 2.5 times, what's included in payroll costs, or maybe the numbers right, but the supporting information behind the numbers don't match. That's probably the most common. And then, you know, as simple as it sounds, misunderstanding some of the verification and certification questions and answering yes when the correct answer should have been and you intended it to be no. That's easily fixed. But when the numbers don't match and the supporting information behind the numbers doesn't reconcile, that's typically problematic. And I would say that's 80 to 90% of the mistakes that we see.
Yeah. I mean, I know I've advised a lot of clients on trying to understand what actually qualifies for payroll costs. Like you said earlier, it's very, 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 you know, generous in what qualifies. There's some limitations on owners and those making over $100,000 and so forth. But it's pretty straightforward. But I know some people are trying to throw a lot more into it because that's based on what their borrowing is. But it's pretty straightforward, pretty simple.
I have a question in regards to credit reports. Are you checking the credit report of the owner or the corporation?
We are not. We're having a conversation in general about their openness to do their banking with us, and they're certifying in the application that they're not in any kind of bankruptcy proceeding, and that's sufficient for us.
Yeah, I saw that one come across where they were denied because of a credit, and I was going to ask you, Mike, because there's no personal guarantee or anything relative to the owners on this. What would be the need for a credit report or a credit pull on anybody applying for the PPP?
Yeah, that's a good question, Jamie. I mean, you know, certainly the spirit of the program is to assist businesses as long as they meet all the qualifications. And, you know, I think some banks or lenders are just reaching a little further and trying to determine whether it's a customer that they want long-term. And they may conclude, ultimately, if I'm going to do other things with this company, I'm going to want to check the credit. So why don't I do that now? That's not our approach, and we don't think that's within the spirit of the program.
Yeah, that's kind of I've had a few clients that kind of ran into that same situation, and we just said, well, obviously the bank doesn't want the relationship anymore, and there's really no need to, you know, the banks have, and this is my commentary on this is the banks have got a big old get out of jail free card on all of this. And I know that you still have to maintain some of your relationship standards and so forth, but as a sense of the, you know, being accountable to the SBA and so forth, it's a very low bar for you guys as well. They really wanted to get this thing streamlined and get the money in the hands of businesses as soon as possible.
Right. That's right.
I have a question in regards to the easy forgiveness application. What does that look like? And is there something that we need to know about that?
I can take that, Mike. The easy app, yeah, they introduced, the Treasury introduced an easy application. And from my understanding, that application basically allows for those that don't have any reductions relative to either headcount or wage reductions, and can simply just go through the process of applying. It skips a few steps from the original application, but it's a newer form that they did, and I think you just can't have any reductions in your headcount and any reductions in the hourly wage or salaries that you paid people.
I have a question, two loans question. Daycare grant and PPP, are the duplicate loans or are they different?
I'm not familiar with the daycare grant program. I know there are lots and lots of different programs under the CARES Act. I'm not familiar with that one, and so I really can't answer that question. I don't know. Jamie, are you familiar with that program?
Yeah, I just had a conversation with the client the other day about it, and I don't think I think it's totally independent of I don't know who's issuing the grant, but I think it's totally independent of the PPP. So I think that you're able to get both. In fact, you could technically get the EIDL loan as well. They reopened up the EIDL applications for non-agricultural businesses this week, and so the economic the EIDL, the EIDL loan is also available, and you can get that in conjunction with the PPP. So I don't think there's a problem with getting it at all, and I know that there's nothing that cross-references to the PPP.
That is it for the questions. Do you guys have any final comments?
I guess I would like to just, from the other aspect for the people that are on the call and so forth, is that, keep in mind, there's, as we talked about the EIDL loan and stuff, there are other resources under the CARES Act for the businesses. And one of the things that if you don't qualify for the PPP for whatever reason, to look at other aspects, either the relative to the credit for employee retention, or to defer some payroll taxes. Those are always eligible out there as well, along with other grants and the EIDL loan as well. But don't be afraid to do this. It's an easy process, and it's cheap money at the end of the day.
Yeah,
I'm sorry, I've got one more question. I missed this question. The question is, I thought that 2.5 times is done automatically. The applicant doesn't multiply by 2.5, correct?
The applicant represents what their monthly payroll cost is and supports that with payroll reporting, and then multiplies it by 2.5. So you do the math on the application, and your lender will ask for verification of the underlying numbers.
Yeah.
Thank you, Mike. Any final words?
I'm just going to repeat what Jamie said, and that is this 2-page application literally shouldn't take more than 5 minutes to fill out. There are still banks and other lenders with the window open, and it makes a whole lot of sense to apply. And to Jamie's point, even if it isn't forgiven, it is very, very cheap money. And let's face it, almost every business in Michigan has somehow, some way been affected by this uncertainty. So I would encourage you to apply.
Absolutely. Don't be scared of it. And the other thing that I want, most banks, the big thing to don't get, and I don't want to scare anybody, but don't have somebody charge you to fill out the application, because that is against the law under the SBA. If you have anybody that says that we can get this for you and it's going to be a fee, you may want to think twice about that, because the SBA has provided ways to pay the agents if the banks are willing to do that for the application. But work with your banker directly, or if you've got an accountant or a CPA, work with them. But I know most CPAs were not charging to go through the application process of the PPP. So I know I wasn't, and it was just more about getting our clients money. But don't fall for any scams that may be out there relative to getting the money and so forth. Work directly with your bank is probably the best route.
Agreed.
Thank you, gentlemen. I just wanted to let everybody know that APACC is having a celebration of Immigrant Heritage Month on June 26th. It is a Zoom happy hour, so I hope you join us to hear some immigration stories and to share some of your own if you do have one. I also want to thank again MAPAC for being a sponsor today. This webinar has been recorded, so we will share that, and we will share contact information of our speakers as well, so everybody can contact them for further questions or make connections. Thank you very much, everybody, for coming today.
Thanks, Duke.